Good afternoon, traders. I'm Matt. He's Jacey. We're with Empire Algorithmic Trading, and it is time for our Hump Day edition of Stock Talk.
That's right. It's where we use the volume weighted average price to analyze the stock market and just the volume weighted average price. We believe it's the best indicator on the market. It tells you exactly what's going on. So, as I like to say, Matt, let's just get to it.
Let's go.
It's time for Stock Talk. All right, Maddie, it is time for Stock Talk, and we had Federal Reserve today. We had, God, I can't. We had the Federal Reserve today. Yeah. We were excited about the announcement, and it kind
Yeah,
of, kind of how we went, right? It was up a little bit. The announcement came out. Jerome Powell, they like everyone expected, they were going to keep interest rates steady. They did. They kind of forecasted two more rates. The market's like, yeah, we don't, two more rate cuts. Market's like, yeah, we think you're going to do three, possibly a half point in there, but there's a 75%. I'm sorry, a 75 basis point projection now on the CBOE Fed Funds Watch. So, excuse me there. So, that's that. What we were also talking about last night is the balance sheet, and the Fed did announce that they are reducing their reduction of their balance sheet by about $20 billion a month, and so the market took that as a de facto easing move. Excuse me again. As a de facto easing move, and you saw a little bit of a rally in bonds, which pushed interest rates down a little bit, and a pretty significant, Jesus creepers, and a pretty significant rally in equities, right? And so,
hey.
even though the Federal Reserve said this is a technical thing to prevent from any liquidity or any kind of a liquidity crunch, the market saw it as a dovish stance, as an easing of monetary policy, and that's why we saw everything kind of rally a little bit. As has been the case, volume was very lackluster, and so you would think, well, okay, the Federal Reserve met at 2 o'clock is when the announcements came through. The market can't really build that much volume. If it's been kind of light all day, you would kind of expect it to be light. Well, that's not the case. You'll see volume come in mass, and it will push that day over. So the fact that you had all day to get higher volume, a nice solid gain like this on continued decreasing volume is not a very good picture. I kind of liken it to the branch that gets slimmer and slimmer and slimmer the further out you go. Eventually, it's going to break. So that's kind of the sense we have. It was a fun day. I mean, it's a good day. The markets quickly recovered over some of their resistance, but that lack of volume just kind of does not raise the confidence level a whole lot. Like I've said before, price pays, right? So we pay attention to the price. The volume is just a confidence builder. So that's all we're talking about. So let's take a look at some charts.
Let's do
Gosh darn it. All right, so here we
it.
have the S&P 500. Let me take a drink of my Pepsi here. I'm in the South. Nobody here drinks Pepsi.
Well, every once in a while, I too choke on that spicy air, and you just need a nice, cool soda to wash it down.
Oh, good Lord. I don't know what's going on here, but hopefully I stop choking on something here. All right, so the S&P had a nice 1% rally. It's important we did climb above that VWAP that we ran into resistance yesterday. But like we said, it was on lighter volume. So this whole move has been on lighter volume. It's really nice to see the stabilization, but we're not home yet. We still have a little bit of resistance. However, that VWAP is coming down, that upper VWAP. So it's not going to take it much. If some volume does come into play, we might get it back over the hump, but right now we're not there yet. The Nasdaq Composite, which was extremely oversold, and I hate that term, but the Nasdaq Composite has been it's been the harder hit of the two major indexes. It had a nice 1.4% gain. The small
Okay.
caps, the small caps rock, man. They were up almost 1.6%.
Wow.
That's very good to see. And actually, the IWM ETF had higher volume, so that's a bonus, right? So as the major caps and the big caps are showing lighter volume, it's nice to see some good money move into the small caps. And then the
I
mid
will
caps
say
are
one
real.
interesting thing about that chart for those who are just listening. It does look like that close was right at a major resistance point where we found it last time we got right there.
That's right. So we're closing right on resistance. As always, we just want to see how the move plays out, but pretty substantial, pretty progress or pretty impressive move in the small caps as well as the mid caps. The overall market,
Hey.
not so much. But these two, the mid caps especially, a very nice solid move above resistance. The MDY, the S&P Mid Cap Trust Fund is about 545. The upper VWAP is a little under 580. So we've got a little bit of room to run on this one before it starts clearing the resistance, the
Mhm.
major resistance. But it's nice to see it find some footing and kind of rally off of a long-term support level. And then, as we talked about, bonds did rally up a little bit, pushing interest rates down a little bit. What you would expect after hearing the Federal Reserve is expecting to lower rates, as well as they're softening their stance on their quantitative tightening. So, uh, pretty bullish moves there. And overall, we're just still in the waiting game, right? But what I
Mhm.
want to talk about a little bit today is just kind of the overall picture of what I think we're seeing here. Um, over the past 10 years or so, I should say not institutional, foreign investment into the US equities has increased dramatically. Some estimates anywhere between $4 to $6 trillion in foreign money has come into the United States. Foreign institutions are indexed to their domestic exchanges, right? They have global exchanges, they have global indexes, and they've been able to beat that by over allocating into US equities. So they've been
Mhm.
over allocating, and they've been able to outperform their domestic markets. I think that's starting to unwind a little bit. You have Trump's tariff war, Trump's trade war, Trump's protectionism and isolationism is forcing a lot of funds to repatriate that money, right? And so how are they going to do that? They're going to take the money out of the U.S. equities, and they're going to put that into their domestic equities. As we've said before, you can see the funds, they can't hide their footprints, right? Now, some of these foreign exchanges are relatively illiquid compared to the US market on a comparative basis. So when you have massive amounts of money coming out of the US market going into foreign markets, it's going to be a pretty dramatic effect. And you can
Mhm.
see that play out in a lot of foreign funds. And we're just going to take a look at quite a bit of those. And the important part is I marked when Trump announced the tariffs, and you're going to see kind of across the board, they've just been on a tear ever since then. So,
Interesting.
yeah, it's very interesting. The other thing that I'm worried about is what's this going to do to the valuation of the overall market? For as long as I can remember, we've been able to maintain a 20 plus PE, usually about a 21 to 23 PE on the S&P 500. Why is that up so elevated? It's because we're the global darling. All the global money is coming into the United States and it's pushing up our prices. Not only are Americans buying the stocks every freaking week with their paycheck, with their 401k contributions, pretty much every American worker is investing in US equities. We also have the entire world investing heavily into US equities. I think I saw one number anywhere between 30 and 40% of our current market is owned by foreign investors. That's a substantial amount. And if they start pulling that money out, that's a substantial supply that's going to be hitting the market. And so we're seeing that. I believe we're seeing that play out. That trade is going to take some time to unwind. So it does hamper my bullishness. It does provide a little bit of a cloud. Like, how is this going to play out? Is this really a thing? And what's interesting is you can kind of see when Trump was elected and everyone kind of, oh, that's just a negotiating ploy. And then once he said, no, this is a negotiating ploy, this is exactly what we're doing. And it just takes off. These things just take off. So let's just take a look. Here we have the iShares MSCI European Market Index Fund. It's up 18% on the year. So if this is just going to be unbelievable. So the Trump's tariffs were announced right here. For example, on EZU, on February 3rd, it was at 49.72, and it's currently at 58.84. For the
Wow.
year, it was up 18%. Same thing
Wow.
with the Vanguard European ETF. It's up 15%. It's been on a solid tear. Now, the breakout started initially before the tariffs were announced, but it's just pretty much a straight line since then.
It's
You
crazy
have
because on both of them, and you can see it on all of these, the day the tariffs are announced, everything crashed and then immediately bounced back and went
just
flying.
just takes off. It just
Massive
takes
gap
off.
down and then incredible momentum behind it.
Yeah, and I know Trump is saying, we're going to make America rich again. I think he screwed that up. He's making everybody else rich right now, and you can see it playing out. It's kind of amazing to watch. Same thing with EWU, right? The United Kingdom Index. It's up 12% on the year. The German fund, what's this one? EWG is up 22%, and we're not even out of the first quarter yet.
Wow.
You have Switzerland up 15% this year. The Japan Index Fund up 6.8% this year. The Singapore Index Fund up 8.7%. The China Index Fund up 24% so far this year.
Holy cow.
The China Large Cap ETF up 25% so far this year. And then just to round it off, the Hong Kong Index up 10.2% this year. And what's the S&P done, right? We're down 7.6%. The Nasdaq was down 10%. The small caps were down 10 or 20, 15%, right? I didn't really run those numbers because we know what our markets have been doing. It's just interesting to see how that interplay is working out. And it's very unfortunate because I think that's going to take some time. Institutions, these are large positions, and they can't move in and out within a quarter, right? And so, if that is exactly what's happening, then we might be in for a little bit of a bigger drawdown and a longer lasting drawdown than what we had hoped. There is always potential, maybe who knows what happens, right? It's all uncertainty. Like his special advisor the other day said that they expect uncertainty moving into April 2nd when they're announcing new tariffs on 200 countries. And I was reading there's something like 15 million different items that they're looking at tariffs on. That's it just blows the mind when you think about it. So it's why we're at where we're at. It's nice to see some support where we're at. It's nice to see the market rally a little bit. It would be a lot cooler to see some broader participation. However, just as we were seeing at the top, we wanted to see some participation from the small caps with some volume, and we didn't get that, and it kind of led to this correction. We're starting to see the reverse. We're starting to see small and mid caps starting to show some volume, starting to see some movement up higher. We want to see that trickle up into the larger caps as well, so we get a broad rally. So it's an exciting time. It's an interesting time. And it's just a good time to sit back and watch and see what happens. So that's pretty much where we're at today, Matt. And for them on, we're just gonna see how this thing plays out.
Well, and I want to take a quick little note on geopolitics here, and I'm not going to try to get political, and whether you believe in it or don't believe in it, that's up to you. I'm not making any kind of judgment on anything with this, right? And I always hate dipping my toe into a geopolitical world, but one thing you always have to think about with an America First policy, which is great, and there is a lot of great things to be said about America First. But America First in a vacuum with only Americans is a wonderful thing. America First, when you're in a sandbox playing with a lot of different countries, and all of a sudden they look over and go, well, I thought we were all playing together, but now you want to be the big dog in the thing. Okay, fine. Do your thing. All of this money that I was sharing with you, I'm now bringing back to myself. So instead of you being able to play with everybody's coin, now you only get to play with your own. And if you focus on growing that coin and making that coin the best it possibly can be, okay, there's some benefits to that, but you do limit yourself on your resources. And so that's just kind of what we're seeing play out on a geopolitical landscape.
Yeah, and the other thing that we should worry about also, and this is more important than I think the equities is how is this going to play out in the treasury market? Our treasury market is the largest, most liquid market in the world, but it also determines more so than the Federal Reserve. The Federal Reserve directs, overnight funds, but the 10-year is what sets all of our interest rates. And that's pretty much market driven. Now, the Fed can fight that by buying bonds like they were with quantitative easing in the 2010s, and now quantitative tightening a little bit, which we're showing. But if we get a wholesale sell off and global institutions lose faith in the federal government to pay their bills, that's going to be a problem, and that's a significant concern. And so I'm a little bit worried about that. That's a little bit above my pay grade, a little above my education level. These are just things that I think about. Like, how is this going to play out? If I was a foreign investor, would I trust the United States right now? And I don't know if I could. So if I can see that, and I'm a bullish American, other people can see that too. And like we just showed, it's playing out in the exchanges all across the world. We brought it up last week when we were looking up. I think it was last week when we were looking at our indexes and seeing what is outperforming. And the world minus the United States is outperforming. Silver's
Mhm.
outperforming. Gold's outperforming. It's all defensive, non-American stuff. And so it's not very bullish right now. And so it's not a short term. Maybe some of this stuff is good for the long run, right? And I agree with that. I think there's significant changes that we need to make. It's just going to be it could be potentially ugly for a significant amount of time, and that's a lot of people are going to get hurt by it.
Mhm.
I can't imagine, someone maybe slightly older than us. There's just, getting close to retirement, but not that much, right? They still have a couple of years left. What's this going to do to them, right?
Right.
There's a lot of risk out there. And so there's a reason why the market is doing what it's doing. And we just got to sit back and not partake because it's just too risky right now. There's too much uncertainty. And so that's how we're doing. And we haven't done the disclaimer, right? And so, we're not advisors, we're not professionals. This is just you and me. We're offering a subscription to a computer program that will tell you what stocks are making moves, right? This is our interpretation of the market. I have no idea what you should do with your funds. I have no idea how you should plan for anything. I'm not a licensed investment advisor. Matt's not a licensed investment advisor. So please, don't take our word for any of this, right? Talk to a professional and help you guide. Hey, this is how I want to navigate this. What we are doing is just providing some education so you have an idea, so you can come armed to your advisor, so you can shop around and say, who knows what's going on? Who's seeing the market the way these guys are seeing it? So we're just kind of providing it some information for everybody. A lot of it is free. We're good at some of this stuff, and so like they say, if you're good at it, don't do it for free. And so that's why we do charge a small fee for our subscription service. But overall, I kind of want to do this. We're doing this as a way to just show people a different way of looking at the market, a different way of seeing some of these trends. And I don't really think there's a lot of retail investors out there that are really thinking about capital flow and international investment and what's the effect going to have on our equities, and what has the past effect been on our equities. And you can see it. Just look at some of these global indexes. They've been flat to moderately lower. If you look at our indexes, they're tearing out, right? And so that's simply because money's been coming into us. And I'm afraid that might be changing. So we could be in for a complete reallocation, a global reallocation of investment funds, as well as a re-evaluation of U.S. equities, which is going to take some time to figure out. So
Mhm.
that's where we're at. In the short term, there might be some potential trades out there. We did have some breakouts. So there's always something going on. There's always a bull market somewhere. We just got to find it. The probabilities of some of these breakouts working are lower in the market environment that they're in. But if you're up for the risk and you're down with that, then by all means, help yourself. But personally, that's not what I like to do. I like to let the noise settle out. I like the trends get established, and then we just ride the wave.
And the beautiful thing about our algorithm and what we've designed it to do is it doesn't care. It doesn't care what's happening in the global geopolitics. It doesn't care what's happening in local politics, national politics. All it cares about is the numbers and the trends that it's seeing. That's
Yeah.
it. So you can literally sit back, turn off the TV, not have to, and just look at the numbers.
Yep. Yeah, it's pretty great. Well, Matt, that's it. So where can everybody find us?
Well, if you want access to those arrow reviews, which again is just kind of our algorithm's take on potential breakouts and potential failures, that's at patreon.com/ Empire Algorithmic Trading. For those of you listening on Spotify, we say thank you. Please hit that like, subscribe button. Same thing for those of you watching on YouTube. Like, subscribe, share it with people. Let them know that we're here and that we do this daily. Otherwise, you can follow us on social media: Facebook, Instagram, X. We're on Blue Sky. And just for more information to find out who we are and what we're talking about when we talk about this algorithm, visit our website, vwapvision.com. That's VWAP vision.com to learn a little bit more. But yeah, all things being said, Jace, it's a beautiful Wednesday, so happy trading.
Happy trading, my man. We'll talk to you for arrow reviews. See you in a little bit.
Yeah.
All right. Bye.